Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 3rd of January. Starting off with the FTSE 100, which has probably done rather better than was expected, in the sense that we are just touching that December resistance line there and trying to get through that. The level in question around 82.70, end of day close above 82.70, and we're looking for potentially the main 2024 resistance at 8400 as the target. But difficult to get more excited than that at this stage, given the fundamental lay of the land. On the downside, the risk is that we fail here, which is, I suppose, odds on, and head back either to the area of the 50 and 200-day moving averages at 8200 or the floor of the post-September 2023 trend channel just around the 8100 level. Good news, RSI back above neutral 50 for the first time in a couple of weeks, and therefore making things look rather half full rather than half empty. Moving on to the DAX, and here it's been a bit of a rocky ride in the recent past. We had a bull trap island reversal, which is normally a rather good sell signal, and situation here now is that we're still trying to consolidate that particular price action of the end of December. What you can see here is that we managed to close the first, the second gap down that we had there, towards 20,000, but lingering there's a gap to fill up to 20,200, but at the moment it looks as though the second gap is the resistance for this market. While that remains the case and we have difficulty getting through 20,000, there's a risk of testing 19,500, which is the old October resistance, and the 50-day moving average now near 19,600. RSI still holding just above the neutral 50 level, but not really helping us decide one way or the other on that market. Moving on to the Dow, and here it's also not been a great month in the recent past. The highlight here basically that we've managed to stay at around the November support there, which is the November gap there, which was around the 42,200 zone. While there's no end of day close well below that, then we are hoping that we'll have a rebound, but it does look as though the price action here is weak enough to allow us to have to test the old November support, 41,600, which was also the old August September resistance. So that would be the logical place for this market. But still, if you look at the bigger picture, we're still well above the 200-day line. So it really, the autumn rally was more of an overstretch to the upside rather than a pullback from unsustainable levels. Moving on to the situation of Bitcoin, where we're still hoping that we can get on the right side of the 100,000 level, and the situation here is that the market's making reasonable noises in that respect. We are currently tussling with the 50-day moving average at 97,000, and above that looking for obviously a turnaround through 100,000 to then retest last month's 108,000 peak. I'm not expecting anything lower now than 92,000, which was and is basically post-November support for this market. On to gold, and here obviously with the new year we're hoping for a performance which will continue the great gains that we had last year, still hanging around the floor of that rising trend channel from last year, so the level there around the 2610 level and the floor of that channel. The risk is that we have a push down to the 200-day moving average and the floor of that triangle there from September at 2500, but at the moment just managing to avoid that, even though the 50-day line is now falling there at 2680, and we really are looking for an early January break of that particular feature to get us back on track for the big bull run there. Moving on to the stocks, and starting off with the former metal NRG, which has been rather horrible to its shareholders in the recent past, but you can see the rug pull from this market. We had a rising trend channel. We were all very happy that the shares were above the 35 pence area in the floor of that channel, but then, as I said, the rug was pulled. Current situation is we're looking for at least a an end of day, well, we've already had an end of day close back above the old July brief spike or probe that we had there around 10.5 pence. Above that, chance of maybe the upper teens going up to 20 pence, but the gap to fill there up to 27 pence still looks as though it is quite a long way away. But when you see these rug pulls, normally the big day down, the shares can retrace a half to 2/3 of that move down. So let's see if Atlas Metals manages to do that. Moving on to a stock where I see that some people on X are trying to will the shares back up again with a bit of charting or their own type of charting, but hopefully this will this example of charting will work too. Here you can see that our previous observation that shares are broken out of that falling wedge in black there from June around 22 pence has worked. Initial target there was the previous resistance in November around 24 pence, and best case at that time up to the 200-day moving average at 25 pence. But now it looks as though we are well and truly in that rising trend channel from the end of last year, top of the channel there, heading for 36 pence, and we're looking for that while we're above the 200-day line at 25 pence and 36 pence. Probably on cue for that by the end of next month or even sooner. Moving on to Alkemy, which we've covered since the lows, and here you can see that shares basically bouncing off our second target there, which was around the £1.26 level. Above that, we're looking for a best case move up to as high as 200 pence, which is a resistance line projection from the end of 2023. Hopefully we could get that by the end of next month, although I suppose in order to get that we'd have to have some concrete funding news. On to a stock which has been requested by a very esteemed follower on X, which is Capex actually, and here the situation is that actually the shares have managed to hit our first target there, which was the top of that rising trend channel base at 0.18, and the view now is that above that, 0.19 in fact, above that we're looking for as high, well, a fresh target and as high as 0.27 by the end of next month. The other positive at the moment is, apart from the multiple bullish candles that we've had over the last couple of weeks, that shows or indicates that somebody's very keen on this situation, is that we've broken above the 200-day line there at 0.18, and that's also starting to rise, or at least is flat at the moment. Expecting that to rise and expecting the market to get up to, as I said, the fresh target there, 0.27 by the end of next month. Ideally, we stay on the right side of that 200-day line in the meantime. Moving on to stock which is being championed at the moment, Eco Buildings, and you can see that here we've been in this falling trend channel, the top of the channel there, basically around the 10.5 pence level, and that's probably the minimum level we need to prove that the shares are back on track in a bullish way. Best case is that we hit the second red line there at 16 pence by the end of next month, if we can stay above 7.25 pence recent support for the shares. A stock that I've been covering a lot, probably more than I actually wanted to, is GSTechnologies, but in return you can see that the shares have hit not one but two but three, but hit the fourth target there as high as 2.9 pence, and it leaves us looking for a fresh target here, which actually is not only the resistance line area, or the resistance area from early 2021 around the 3.25 pence area, which is basically where we are now, but actually up to as high as 4.5 pence, which is the upper parallel of the last resistance line projection there from the middle of 2021, and 4.5 pence valid hopefully while we're above recent price action around the 2 pence area. So that was the low of yesterday, so above 2, looking for 4.5 on GSTechnologies. On to a stock which is a bit of a surprise as well, a surprise inclusion, which is the situation at Invinity. Here we've had a tentative recovery here, rising trend channel base, and the top of the channel there, and the gap to shoot for at the moment around 19 pence. The channel there heading for 21 pence. But the barrier at the moment is the 200-day moving average at just around the 18 pence level. We haven't been above the 200-day line properly since the autumn of 2023, but looks as though we may finally have a meaningful turnaround, especially as we had an unfilled gap to the upside last week, and also we have a sharply rising 50-day moving average. Above that, expect the 200-day line to break and a decent upside for the shares. On to Pulsar, which is doing rather well at the moment. Here you can see that we've managed to hit our initial target there, which was around 29 pence. We've got the 50 and 200-day lines now rising, and obviously we've had decent funding news. That leaves us looking for the next level up, which is probably at this stage, obviously there's fundamental factors involved as well, but probably the upper parallel of that broadening triangle, which is heading for 36 pence, and we're looking for that by the end of next month, while we remain above the 200-day line at 27.5 pence. But let's see if the shares can live up to that charting potential. Moving on to a stock which I covered just the other day, which is Revolution Beauty, and here you can see that we've had we've had a successful example of a bear trap island reversal, so gapping down for the shares in October and then gapping up to start 2025. Very, very strong setup, as that tends to be very reliable, and above 16 pence, which has been resistance on the way down, looking for up to the 25 pence area well before the end of this month. On to Tomco, and here you can see that the shares have kept on going in terms of their recent recovery. A nice V-shaped bull flag, as I call it. 50 and 200-day moving averages rising sharply, so 0.11 by the end of this month looks achievable. That's the top of a broadening triangle from the beginning of last year. Haven't looked at the next stock for a long time, which is Team Internet, and the picture here is that we're looking for a continuation of the recent tentative recovery that we've had. That is said on the basis that we're in a triangle, and the triangle base rather, and the shares have gapped up off the low. Initial target here 13 pence, but I think if we can get to that in the next few sessions, then that would show that there's a more healthy and extended rally on tap. Situation at Tallow, also one which has been rather fraught in the recent past, maybe from a technical as well as a fundamental perspective, but here the shares have gapped up after gapping down back in July. That suggests we've got a potential recovery here and a move to the top of that broadening triangle there, as high as 28 pence by the end of this month, while we're above the 50-day line there at 22.5 pence. But as I said, the technicals there of the gap down and the gap higher, the bear trap island reversal, are quite attractive at the moment. Finishing off with Zanaga, and here it's been a rocky ride over the past, well, at least until last month, but the shares gapped through the 50-day line last month and really haven't looked back. The initial target here, the top of the triangle there at 7 pence, and above that looking for a fresh target there, top of a wider triangle, which is up there at 10 pence. Hopefully we'll get that well before the end of this month. Ideally we stay on the right side of 8 pence on an end of day close basis in the meantime, and just a hint that we could be going to a golden cross between the 50 and 200-day lines as well later this month. That's it for me today. More updates over the weekend.